and stuff. Okay, so we are live, Amitava. Okay, so hopefully we've got some people jumping on. Today this is our second live that we've done, and today we're going to talk about the housing market, take your questions in regards to what's going on, what we're seeing, maybe interest rates or market, multiple offers. And I do have some charts prepared with April close data. If you've watched any of my market update videos before, you know we like to revisit those charts, so we can definitely start going through those. But Amitava, why don't you go ahead and introduce yourself? Amitava is one of my lending partners. You're muted, Amitava.
Yeah, I thought like you will talk first and give them the essence that what we are talking today. Okay, hi, myself amitava.chakraborty. I'm from BMO, Bank of Montreal. I'm definitely helping people in Bay Area and definitely all 50 states about their home buying requirements. It's a purchase refinance. Definitely we will talk about it. And definitely today, as Theresa mentioned, our focus would be just to make sure how the market is changing. In this changing market dynamics, what is the best for our buyers who are aggressively like thinking of getting their foot into the door, but somewhere they are slipped out for few reasons that we talked about. And make sure like you understand what is the essence of this entire journey and what way you can get your winning bid on the table.
Correct. Perfect. Okay. So yeah, I'll go ahead and jump over to my slide set and we'll go over that. And then we'll keep a watch on the chat for any questions that are coming in, and we'll have our discussion. So I'm going to share my screen. Okay, so I have here slides. Hopefully everybody can see them. Do you see them, Amitava? Give me a thumbs up.
Yes, I can see them.
Okay, perfect. All right, so we are here in May 2024, and we're going to cover the closed stats for April 2024. But one of the biggest questions I hear is where's the inventory? Where are all the houses for sale? And we've been, since the beginning of this year, watching several market factors. The first is the local market dynamics. The second is interest rates. They've been volatile, and Amitava can give us a little more insight into that as well. And then, of course, the number of homes for sale. So my forecast at the beginning of the year, actually, I think actually was published in December, was that we're going to see a 6 to 8% increase in 2024. And I knew that that was probably conservative, but I wanted to stay more on the conservative side. So we're going to give you an update and snapshot on what that looks like so far. So let's talk a little bit about the San Jose local factors or area dynamics. What we've seen is a strong S&P 500 appreciation over the last couple months. We seen a slight dip, and obviously this has been a little volatile as well. And Santa Clara County house prices actually dipped at the end of 2023, and we've seen a very steady increase in prices ever since then. So ultimately, that's making affordability a little bit more difficult. But despite the high interest rates, people have stock money to make down payments, and young tech-employed couples or households are able to get into this market. And so prices are heading up because we continue to have low supply and still good demand. So let's take a quick snapshot of the April close data this is specifically for the city of San Jose, with the average price coming in at 1.852 million. So just in December, the average was 1.677 million, which we said was actually a low or a decrease from earlier that year. But if we look at December to April, we're already up 10.4%. But if we look year over year, April to April, we're also up 10.9%, with the medium up over 17%. So the market has really taken off despite these interest rates, and Amitava will be able to share some of the success stories that he's seen. I can also share some of those and comment on those. But look at this average sales price to list price ratio. On average, 111% of the asking price is what sellers are seeing. Now, granted, some pricing strategies are to underprice to get multiple offers to really push that up, which is why you're seeing that high number there. But still, it is near record highs. In the peak of 2022, right here, the delta there was about 18%. So we're not quite at that average over, but we are significantly high as far as overbidding. It is a supply and demand issue that we're experiencing. So this yellow line is the supply or number of homes for sale, and we have been extremely low. 2023 was low and pretty flat. 2024 started off even lower and has been increasing on a traditional curve, but it has not gotten above what we would consider almost winter levels still at this April-May timeframe. So at the end of April, there were 250 homes in San Jose. The peak in 2023 was in April at 268. So we're a little lower than that, which is just an absolute record low for San Jose. If we follow that pink line across, you can see this time of year, even on lower pandemic years where the inventory was down, we are still much lower than that. And so that low supply with still some affordability for some buyers creates good demand. It's driving those market prices up, up, up. You can see the slope here between the average of the orange line and the median blue line completely increasing up at a sharp slope. So interest rates, well, what are they doing? This is a quick snapshot I took. This an average from a Fannie Freddie survey. Amitava, I don't know if you want to come in and comment on this, but this is showing over 7%. I know we've seen a little bit of movement in the last week, some of it for the better and then back up. I don't know. Wells Fargo was reporting 6.5% for the 7-year ARM. Do you want to comment, Amitava? What are you seeing?
I would say, like, as you just touch upon different points, Theresa, I would first start with the inventory days on market, and definitely I will come down to this particular slides that you are talking about. So year over year, last year versus this year, I would say the sales, the growth pattern almost, like I would say 12 to 13% increase I would say last April versus this April. If you see the data point wise, that significantly there is an increase in the sales price. It's in Santa Clara County, the same thing we are seeing in other counties like San Mateo County, Alameda County, Contra Costa County. Pretty much I'm having my transaction in all these counties, and I'm seeing year over year on a like 52 weeks window, the growth pattern for the sale has increased significantly. And that's on, if you are like considering on a scale, it's all about like 9 to 13%. And that's considered to be a significant jump considering the high interest rate patterns.
Yes. So you're talking about sales prices, right? In line with what I
Correct.
said about 10%, depending on that's San Jose. Yeah.
Correct. And on top of that, we need to also get to know, like sometimes people are saying there is a low inventory, but we are missing out one point, like inventories are coming in and quickly vanishing out. So basically, inventories are significantly there. It's not like that inventory is not there. Inventory is coming and going. So basically, it's a balancing act is happening. So mostly those who are really, I would say, active in the market, understanding the niche and the playing rules of this game, they are getting into the contract, and rest of the people who are still looking, they're looking and saying and going into the situation that, hey, there is no inventory. But it's a kind of balancing act happening. Inventories are coming and going pretty fast. So last September, generally,
I lost
are coming
Amitava.
and sitting. Yeah.
I lost you there, but you're back.
Okay, so I'm saying there are some popular zip code in Santa Clara County, just to name a few: 95120, 95070, Almaden, Willow Glen. properties are coming and sitting there at least for 17 days to 21 days last September. And now, if you see that same data back in February till March, that date has gone down to like 7 to 8 days. So it's a significant, I would say,
Yeah.
drop that you are showing just before that, exactly 11 days on market. And I'm just saying this number says 7 to 8 days. So this is correlating with each other. So it's not like that report that you pulled out for like San Jose or Santa Clara County. I'm talking about 3, 4 counties together on the kind of transaction I closed over last 6 months. It's showing there is a significant reduction in the days on market for sure.
Mhm. And
And
this,
I would, yeah,
I was just gonna say the days of inventory, like how long it sits there, or how long it's gonna take to sell all of the inventory is less than a month. So again,
correct.
extremely strong. To your point, moving inventory so quickly. So the other thing to look at is how many sales are actually happening, right? Not just the
Right.
inventory. Mhm.
Right. And now the next point that you just touch upon regarding the interest rate, the third part of the puzzle, that's something very unique out there. Like this year, particularly in March, I would say from 25th of March, those we are all are in lending industry. We call it a kind of cooling, not like a cooling effect, it's a heating effect on the other way around. 25th of March onwards, till I would say middle of April, rate got increased like heavily. Within a matter of 3 weeks, rate increased almost like 0.5 to 0.6%, and 10 years treasury yield crossed the Fibonacci ceiling for the record time. Like I haven't seen in my practice for last 7 years that it crossed more than 5.02, but it crossed that ceiling level in like so many years. We haven't seen that. And now slowly correcting. So as you already pointed out, like in some lending organizations showing a jumbo rate about 6.5, and that's true. Like most of the organization, including ours, we are seeing that same kind of volatility in the market. Though 10 years treasury yield is slowly correcting, right now it's around like 4.6, 4.5, 4.6. It's a little better, definitely, than last 3 weeks, whatever we have seen in the market. Market is slowly correcting, but still there are multiple factors like layoffs are happening in not only in healthcare, so like not only in like service sector, healthcare sectors. There are some prominent organizations doing like more than like 15, 20,000 layoff in last, I would say 10 days, 10 to 15 days. And this is definitely a worry signal to all of us who are in the market. I have seen in some of my personal transactions, people are talking that, hey, their companies are silently doing layoffs. Their hierarchical managers, they are also handling that pipeline channel. So it's everything is out there. Interest rates, definitely, if we are talking as a team, interest rates are still high. It's around like 6.5, mostly for the ARM products. For 30-year fix, it's close to 7 still, like I would say. I'm talking about portfolio jumbo products, not about agency high balance. Definitely, those are, as you just mentioned, on your Freddie Fannie list. It is perfectly aligned with that. So I would say interest rate wise, if people are thinking, I won't see that it will be going down sooner. Like especially, I'm not seeing any hope like in quick summer that interest rate will go down. If you're thinking that, hey, my I'm looking for a situation when I'm buying my house with a 5% interest rate, believe me, that not going to come soon. It will take
Yeah.
time. So as me and Theresa, we all are talking like, let's get your foot into the door, marry the house. That's more important. If you have proper savings, if you have proper reserves, like go for it.
Mhm, mhm. Yeah, so this is a mortgage rate forecasts that have been updated based on, the last Fed announcement and such. And most people are saying that we're going to stay in the mid to high sixes, and next year maybe touch the fives, but like they're not even saying much relief even for next year, right? So here's different Wells Fargo, Fannie Mae, National Association of Realtors, all these different mortgage bankers association, their predictions, and they're all, this pink line is where we are today. We're all at high. They're saying they're going to see it go down, but it's going to take a while. And you see that at the beginning of the year, maybe 6.25 is what most of these estimates are stating, not below 6.
I would say like this kind, if you remember back in 2023, beginning or May 2023, we have similar kind of carbs are already being in the market. Like we are predicting that I would say end of April, end of 23 or beginning of 24, we will see a significant rate cut. And now it is pushed to 2025. So what we are seeing constantly, there are some market volatilities impacting this interest rates or the 10 years treasury or the bond market. It's not like one factor is predominant out here. There are multiple other factors, socio-political situations, and there are some oil prices, there are some a war situation around the globe. So everything is compiling together and push things little farther ahead, because whatever these trails are showing, like 2025 or beyond, this interest rate is slowly going down towards 5%. It seems very promising, but I would say let's wait for at least another 2 quarters. Like what we are already in quarter 2. So after quarter 3, I believe we should have some clear picture how the interest rates are heading towards the positive direction, or maybe it would be stable for next 6 months or so.
Mhm. Yeah, so I mean, the lesson here is, to your point originally, we're not going to see a huge improvement in interest rates, and waiting for interest rates to improve is not a good game plan if you're trying to get in, because at this point prices are just going up.
Right. And I would say if you are only thinking about interest rate, think in a different way. Your ball game should be differently. You can find out that, hey, is there any particular product that I can do a less down payment and I can increase my potential? Like basically, I do not want to liquidate my stock because stock is not doing good. So is there a particular product I can do 15% down, 10% down, qualify for a little higher, considering my debt to income ratio is qualifying? Can I do a HELOC, take out some equity from my existing home and use it for my purchase? So these are basically, as I call all the time, financial gymnastics. So if you can do with your lender, and he needs to understand, like it's not about a like particular format will apply it to you. They need to find out, juggle the things, and make sure like they will help you understand your financial bandwidth. So this word is very important, Theresa, that I always try to use with my clients, that it is a kind of elastic bandwidth for with your clients. So you need to make sure they understand it. Like even after paying their monthly mortgage, they need to pay for their property tax, they need to pay for their insurance. So the total principal, interest, property tax, and insurance, this after paying PITI, they feel comfortable. They should not be house poor, rather than they feel comfortable with their new house and new payment shock.
Mhm.
Just as a traditional example, I will share. One particular family is renting out and they're paying around $5,500. Now think about the correlation, and they're like renting for last 15 years. Okay, now all on a sudden they have a good amount of equity being made, and now they want to buy a bigger home in Los Altos. So they get into a contract close to $5 million. Everything is fine, but they think they are not putting more than 20% or 25%, whatever it is. But they have some, I would say, reservation that yes, we are not liquidating a single penny. We have the cash ready. We only spend the cash. But bank look in a different perspective, like lending organization. Your current monthly payment is $5,000 and you're going to $24,000. So think about that jump. So that's something you are not experienced. You are not a seasoned, I would say, a homeowner before. You haven't managed your balances from 5,000 or $4,500 to a $25,000 per month, including your PATIA. So those things, I believe, before you get into the game, you need to understand. That's one thing. Second thing I would say, like I have another example, like it's a pre-IPO company. Most of our viewers who are listening to us, they might correlate that their company is not public listed company, but it's a pre-IPO, venture capital backed company. Soon they would be an IPO. Now one of our client, a critical, like very unique situation, they got like 89,000 bonus every year. So They have no plans for buying a home. Then all of a sudden they thought this year they got 110K of bonus, like this year, March, and they rolled it out into their pre-IPO stock. That means they buy pre-IPO stock. So technically think on their paycheck, their bonus, that particular bonus line is gone now. Now, apart from bonus, it is saying some stock option purchase kind of a thing, RSA purchase or stock option purchase kind of a thing. For bank, it is very difficult unless there is a supporting HR letter to approve that as your regular bonus income. Though it is showing you are eligible for a bonus, so we get it approved. But this needs a lot of hackle basically to work it around along the line. They've been initially looking for different lenders, talk to them, everyone having the same question, where your bonus gone? You got 2 years bonus, third year bonus is gone, but you have a new entity is showing up. So my always suggestion to the clients, to viewers, please talk to your lender before you put a non-contingent offer. Again, those lines are coming in multiple times. Get it validated, because believe me, when Theresa, as a seasoned realtor, helping you pitch your product or pitch your thing to the seller, to the listing agent, she needs to feel empowered. This is all about the empowerment, basically. So your finances should be empowered in such a way that when we create the financial picture to the other party, like a listing agent or the seller, they feel good about you.
Yeah, their whole job as a listing agent is to minimize the risk for their seller client, right? So the more that you can do to prepare yourself and set that up, the better.
Right. And you are in the same shoes, I don't know how many times, being a seller's advocate, being an agent. And you are right. Like, you need to make sure there is a minimum amount of risk after getting into the contract. So if buyers are putting a non-contingent contract, they need to know all their options.
Yeah, absolutely. And for one example, I just had a listing in Berryessa, North San Jose area that received 10 offers, and there was a lot of jostling of prices and people trying to come in with their best offer. But ultimately, the seller chose somebody who had a very significant down payment and really great terms that worked for them, because that was the least amount of risk for them so that they could move forward with confidence, right? So putting all of those pieces together and demonstrating your financial strength is really important to a listing agent. That played out in that, and this market, because properties are moving so quickly and selling over asking with multiple offers, that is one of the unspoken terms that stick out that might help you win the offer.
For sure.
Yeah. Okay, so this is we talked a little bit about inventory versus sales, and the inventory looks low because it is moving so quickly, but the sales are still relatively low. So we look at this pink line, they are on par for what we saw last year and about this time of year, but still much lower than what we've seen in previous years. And I think that's just because a lot of, move up buyers are not making that transition. So a large segment of the market has not moved a lot due to maybe the payment jump, right? From a lower interest rate they got a few years ago till today. Whatever the case may be, there's less sellers making a move. So there is still less inventory, but this yellow line can make it look a little bit more drastic because they are moving quickly. And that's why you see a delta between what's available for sale in the yellow line and what has sold in the green line, because they are moving so quickly. Most escrows take 30 days and most houses are selling, we saw average 11 days or less. So they are pending for, oh, and I'm not sharing my screen. Sorry about that. They are pending for a very different, very short, a longer time than they are active on the market, essentially. So let me bring up that slide and show you what I was talking about here. So here's the pink line of the number of sales. If we look at the sales closed in April, we are in line with maximum month that we had in 2023, but lower than many previous years. You see most of those years were significantly above that dotted pink line. So there's still less sales happening, which makes sense with the affordability and the interest rates that we're seeing. So in April 24, we closed 350 units. In April 2023, it was 273. This is San Jose numbers again. So we are seeing more sales, to Amitava's point, more sales now than even last year, just because we're turning them much faster than we did previously. So if we have any questions out there for the viewers that are watching, please feel free to type them in the chat and we'd be happy to address those questions. So this is just a slide, and Amitava, I think we can have a good discussion about this, what our advice might be for buyers, right? I think ultimately buyers need to be ready to compete because that's the market we have, and we don't see a drastic change of that coming anytime soon unless our inventory all of a sudden shoots through the roof. And it could be a combination of factors. It could be inventory goes up really high, interest rates go up even higher, and all of a sudden less buyers, and then we could have a tipping point. But that's unlikely at this point based on all the different factors that are fueling the market. So be ready to compete, educate yourself on your local market where you're looking, work with a strong agent who's going to know what the actual pulse in the market is, as well as being able to make that connection with the listing agent to give you that extra edge that we talked about with your finances and other factors. Do you have anything to add to that?
I would say, like, on this, along with this professional advice that you are like just mentioning out there, one thing I would like definitely mention about appraisal. When you are competing in this market, make sure you understand how appraisal works. Like one case I heard, like the property has a celestial view, like it's like unique view, and that's why my buyers are putting 110K more. This should not happen. Like, see, whenever appraiser go and appraise a property in a particular neighborhood, it might be your house is on a corner lot, is actually just close to a valley, and it is showing that entire valley. That doesn't mean that the view only can be an adjustment factor for 130, like 10K of your value increase. It may not. Yes, after your house being sold, like after you own the house, maybe the another house in that street can come close or even more, because appraisal will be always, I would say there are three different approach. Again, I would say there is a cost approach, there is an income approach, there is a sales approach, but mostly I would say 9 out of 10 times always is if it is a market where we are in, the appraiser will take this sales approach. They consider that which are the houses sold near your subject property in the same gross living area. That means the gross living square feet, the bedroom, bathrooms, and they will do their adjustments. Yes, they do adjustment based on the factors, like if it is close to a highway, close to a railway track, close to a busy road, if it is having a proper view from the backyard, if there are other additional upgrades being made in the property, they do all those adjustments. But just do not make yourself fool like that by saying that, hey, someone told me because this property has a unique unearthly view, so I will be putting like 100 or 200K, 200,000 more, and expect this property should appraise. So this is another piece of advice I would say, being a lender, that I'm seeing, and I'm trying to educate my client all the time, that just go with your professional advice from your realtor, because they can pull up all the comps for last 90 days. If you see in 90 days there is no sell, suppose you are buying a house that is 1600 square feet, 3 bed 2 bath, and your nearby last 90 days there is a sell which is just 1.6 million max. And if you're putting 1.75 on that house, believe me, there is no likelihood that it will be coming on price, because appraiser is completely hell-bent on that part, that they do not have any adequate appraisal report, like appraisal cells, to support that kind of a thing, unless it is unearthly of a house. Basically, if it's a brand new, all the top-notch upgrades are there, say, those things are completely separate. Like brand new house, if you say resale house, no modification being made over last 5 years, or if it's a standard cookie cutter like upgrades are there. So you need to find out those kind of nitty gritties. Maybe, Theresa, we will schedule a complete separate call on the different nitty gritty parameters, case studies on appraisal, because I believe this is a buzz in the hour, buzz in the town, I would say, that everyone is seeing that they are throwing money on table and sometimes appraisal is coming short. And so we'll talk more about it. So I thought maybe I can talk a little bit about it. And
Sure.
as a seasoned professional, believe me, Teresa, we always educate our client at the time of writing an offer based on our experiences.
Yeah. And I one of the things that I see falls short with people when they're thinking about appraisals as well is that an appraiser for the bank has to have at least 3 solds to support the price, right? So even if there's the one piece that supports it, they have to use the other 2 that maybe don't and try to do the gap, but then it's probably going to fall short. So it's keeping that in mind as well. You can't just have one particular property to support it. The bank is looking for more of the entire market or 3 options to support that price.
And another thing that you just rightly mentioned, maybe you can say that, hey, I'm buying property number X and 5 houses from that house sold for suppose 2.1 million. And now I know my house should be more than 2.1 million because it is listed like that way. But there are multiple factors to consider. What is the condition of the other house? Maybe that house is a ground up new build. You cannot consider a ground up new build versus a resale that is like 32 years old. You cannot. Like sometimes we try to fool ourselves by convincing ourselves, because see, when the seller is listing the market, they never considered, they just said, hey, there is a new house, brand new house sold at 2.1. Now I'm listing my house and I'm expecting my square feet is kind of similar and I'm expecting also 2.1. Yes, it might be, but there is a gross adjustment being made on the kind of upgrades, kind of new build, all those parameters. So those adjustment factors you need to consider as well.
Absolutely. And so one thing that buyers, if you're finding you're getting stuck or overbid in a particular market, consider expanding your search criteria, whether that means maybe a little smaller house or a little further away than you were thinking or a slightly different neighborhood. Really prioritizing the top 3 important items are critical so that you can find the right match of, affordability and the property that you want to attain. And be patient because sometimes it takes a while to get that right combination of homes. But on that note, be ready as soon as you see it to make an offer, because you may find that the combination you're looking for is not coming around very often. So you should be financially ready to go, everything ready to go to jump right away. Shouldn't wait on your loan qualification, getting it ready. So for sellers, I think this same thing applies if we reverse that, right? Knowing really where your property stands versus the competition, understanding the market factors that affect buyer pricing or buyer bids, right? And pricing your home in an attractive fashion to be able to hopefully get multiple offers and multiple buyers so that you can pick out the lowest risk, best term offer for you. And then you will have a less stressful experience. So, and buyers today, are you finding, Amitava, they're looking for something they can move into? They're busy, they're spending a lot of money. Their monthly expenses are high to get in at these interest rates right now. And so they ideally want to pick a property they can move right into or is priced extremely attractively.
True, 100%.
Yeah. So if you're thinking about selling, you want some insight on that, we do have seller seminars. We also offer buyer consultations to help you think through what your search is and what your budget is and get started on the right track so that you can be prepared to actually make a transaction and make a purchase in this market.
And I think that is the unique propositions we try to educate through this kind of a session, seminar, or kind of live videos, that If you sometimes think of buying or selling and had some doubt, please set up a meeting time with me and Theresa. We would be more than happy to go through these numbers, give you some different proposition and perspective about your next buying or selling. Because see, we have seen it's statistically proven 67% of the sellers are kind of buyers down the line. And definitely buying or selling are going hand in hand. So if buying is tough, selling is also getting tougher. Okay. And we are not definitely seeing a lot of inventory also, because we know most of the major chunk of the sellers are sitting on a great interest rates, about like 2% to 4% per se. So those sellers, unless there is a real need, they are not putting their market back, like property back on market. So considering those parameters, we believe there are different strategies that we can obtain. And again, if you say that, hey, Amit, what are the specific strategy? I would say there is no specific strategy. There is no thumb rule. There is no bullet point for that. Every client has to make a customized strategy. And that's why as a professional, you need to talk to as me, a subject matter expert who can create just like a diet chart. Diet chart cannot be universal. It is basically trained to a particular person health, their physique, their body, their metabolic criteria, their BMI, many things get into consideration to make a diet chart. The same thing I would call this is a financial diet chart for you, that we will create very customized, chisel it out so that that will custom tailor for your home buying needs.
Yeah. Exactly. It's important when you're making one of the biggest financial transactions of your life to have a good plan and to be thinking through all those scenarios and working with professionals. Just like you would a doctor if something was wrong, you need to have professionals on your side to come up with the best plan. So.
And plan may change also. The same thing, plan may change. And that's why we are here, because I have been like me and Theresa, we are definitely having so much of transaction we have experience that how to navigate into this tricky water. If we see like particular plan is not working, we should have a plan B, plan C that will custom tailor again and fit into your criteria. Like for a very typical example, if you say, hey, I am only relying on my stock money, and all on a sudden, on a particular your stock crashed like 30%. It may happen, and it happened over
And
past.
it's
I'm
happened
not.
before.
Yes, it happened in 2021. I'm not quoting particular company's name. On a matter of 7 days, their stock prices sliced down by 43.7%. So then we need to get ready for a backup plan. Like, what are the different backup plans? Sometimes people say, hey, I have some money parked in my foreign account or my India account or Korea, China, different accounts. So we need to make sure, like, before you get into this journey, our plan B, plan C, even plan D, if possible, should be ready, because you don't know. There might be some surprises. And believe me, I have seen so much of it's not like I would say surprises, in the sense it is not we anticipated from the beginning. All on a sudden things happen, and it happened out of things happen. Like I have seen, I would say in 23, 22, people lost their job in between their transaction and without any single clue to it. But we survived. We have those backup plans. And right now, when I'm getting into the discussion with my buyers in a buyer consultation, and same Theresa, when she did with her clients, multiple scenario, we try to make sure like we have some backup also being discussed parallelly as a emergency situation.
Yeah. And again, working with professional, they can talk you through the situations, guide you through so that ultimately you save money or get the property without a big loss, whatever the case may be. But definitely it's important to have a strong team on your side. So with that, I think we've got several viewers, but no questions. So would we maybe just close up
Yep.
a hair early, unless you have any closing thoughts? I don't have any additional thoughts at this time.
For me, definitely not. I would say now we are just close to in between May 2024, and there is lots of opportunities still out in the market. I would say if you think like you have some doubt, even you are working with someone, but you need to just double check, just like taking another opinion from another doctor or a lawyer. I would say second opinion, third opinion. We are always there as a team. And I always believe that helping, our main purpose of making these videos is educational, no professional outcome apart from that, just to make sure you understand we are here to help and grow with our community.
Mhm.
As a professional in the lending industry and also Theresa on the real estate industry, one of our motto is to help and grow with our community. And this is our professional, one side of the professional outreach to give back to the society in form of knowledge.
Mhm.
And in my practice, believe me, as you said, like some thoughts I have seen, there is a dearth of knowledge. People, some of the buyers, they are getting into a contract without knowing what contingencies at all mean, whether contingencies are their rights or contingencies are their obligation. They have no clue.
Mhm.
They even don't know like what reserve requirement they have. They know some numbers, 5 months, 6 months, 12 months, 18 months, that's all. But why these reserves is needed, why the concept of rainy day funds in form of reserves is saving them a cushion buffer in their financial process, they have no understanding and idea. So being that said, if you have any financial, like home financing related financing questions, I'm always there. Amitava from Bank of Montreal right now. In your Bay Area local lender, you can always reach me out. My details would be there at the end of the video. And Theresa, if you can add your final thoughts before we'll close down.
Yeah. I would just say, buying a home or selling a home is something you don't do very often, maybe 10 years, 20, 30 years. And
Yep.
so, getting somebody who's doing this often, multiple times a month on your side is important so that you know the current market and could be fully prepared and set up and make a good, strong financial decision. So we look forward to the opportunity to speak with you or talk with you or guide you along your journey and to customize the steps for meeting your goals of homeownership or selling your home. So thank you so much for joining us today. We'll put our contact information in the description of the end of the video. Yeah.
And see you soon.
Yes, absolutely. We'll do this again. Thank you.
Bye.
Okay, I ended the live stream, but you and I are still on Zoom.